You're listening to TRAXXfm's podcast. If you've enjoyed our content, more podcasts are available on the RTM Click app and website. Let us know what you think. Please email us at traxxfm.rtm@gmail.com. Like and follow us on social media at TRAXXfm Official.
Tune in and be part of the conversation and the dialogue. That's the phrase that we're living by right now in the second hour of TRAXXfm's Trax Momentum, 11:15, and it's now time for Face to Face. I'm your host, Anil, on the mic. And Anil is not alone in the studios. Today I'm joined by an expert in the field of economics, and he's none other than Dr. Mohd Afzanizam Abdul Rashid. He's the chief economist at Bank Muamalat, Malaysia. And today, Dr. Afza will be sharing his expertise on the topic that we're discussing today, which is Malaysia's economic performance and expectations. Dr. Afza, welcome to Face to Face.
Thank you, Anil. Thank you for having me here.
It's finally great to be face-to-face with you.
Yeah.
Because the last time we had a conversation over
True.
the phone, and today we are meeting face-to-face, looking very nice in black and white, in true Economist fashion, I have to say. You fit the bill really well.
Thank you.
So today's conversation is going to be split into two parts. We'll take a look at retrospect and how the economy has been for this year and how you foresee the economy for 2024. So perhaps, Dr. Afza, we can start off with your description on Malaysia's economic performance for year 2023.
Sure. Thank you, TRAXXfm, for having me here. I think, generally speaking, I think the Malaysian economy has been performing quite favorably. Mm-hmm. I mean, taking into considerations that, the interest rate has gone up quite a fair bit. Last year, the OPR was at 1.75%. And it went up to as high as 3% now. Right. And at the same time, we continue to grapple with the rising cost of living. And I think the external sector in terms of the financial market are still wobbly. But I think the country is still able to continue to grow positively. In the first 9 months, if you look at the gross domestic product, the country has been growing at a rate of 3.9%. Okay. I think that is quite decent considering that last year, I mean, in 2022, the economy was growing at a super fast rate, 8.7%. That's such a high base there. So this year, we are able still to grow at 3.9%. I think, in a nutshell, quite decent, I would say. Consider challenges, but of course, going forward, we are still hoping that things will pan out better for us, given all these measures being announced by the government. Yeah.
Okay, and how do we fare in terms of economic performance when we're compared against our neighboring countries, especially in the ASEAN bloc, Dr.
I think Malaysian economy, being small and also open to the external factor, we are not immune. Yeah, I think the latest number that we had in terms of the exports, the country recorded 5.9% contractions. And this is quite similar to other countries as well in this region, in Singapore, in Thailand, in Indonesia. So we are very trade-dependent nations. So on that note, I think we are fairly, pretty much standard across the board.
Okay.
In that sense, yeah.
Okay. Just to backtrack a bit, you mentioned about GDP and our steady growth.
Sure.
One of the things that we try to achieve during our conversation is to make all of these financial terms as relatable to the layperson out there.
Right.
And I understand from a previous conversation I had with one of our guests that GDP on the rise essentially reflects on the country's export, on the growth. Or maybe you can, add some perspective to that,
right.
Doctor. Yeah.
Essentially, GDP is a gross domestic product. Which tells you about the amount of production of output for the year.
Okay.
This covers the goods and also services sector.
Okay.
And in the process, in order for you to produce an output, you need a labor.
Yeah.
You need machines.
Okay.
In economic terms, we call it capital. And the other will be technology.
Okay.
So combine these three factors, then we are able to have that GDP.
Right.
So whenever you see the economy continue to grow at a positive rates, and typically you would need labor because you need someone to do the job and produce now. So in that sense, it matters for as an economist or even policymakers to observe the GDP trend. So I think what it means is that how much we are able to produce for a given year.
Right, our capacity to produce for a given year. Okay. And Give us a perspective, Doctor, on the current global economic state right now, and which sector do you think is affected the most in this spectrum?
Right. I think at the moment we are still worried about the impact from the sharp increase in the global interest rates in the US, in UK, in Europe, with the exceptions in Japan, where they continue to exercise a negative interest rates now. But beyond interest rates, we also have to deal with these, what the IMF call it, the geo-economic fragmentations. Because things are very, in terms of trading nations now,
Right.
they are becoming more inward-looking. They're becoming more protectionist in that nature. So this will have an impact in terms of how we do business going forward. And given the ongoing geopolitical tension between the US and China and other parts of the world, so that will be the key risk for global economy going forward.
Okay. Now that we understood the current economic state in our country for 2023 and the global economic position that the world is in, let's jump in for a quick break. And when we come back, we will try to get your opinion on the economic trends that you foresee for 2024 here in Malaysia. Ladies and gentlemen, for those of you who just tuned in, I'm today speaking to Dr. Mohd Afzanizam Abdul Rashid. He's the chief economist at Bank Muamalat Malaysia, and today we are taking a retrospective view at the Malaysia's economic performance for 2023 and our expectations for year 2024. Keep it right here on Face to Face at TRAXX Momentum.
For your latest information, get expert opinion on an issue affecting us as Malaysians and citizens of the world, when we go face to face with our guests on Thursdays at 11:15 a.m. Only on TRAXXfm.
Welcome back, everybody. This is Face to Face with your host, Anil, on the mic. We're speaking about Malaysia's economic performance for year 2023 and what is it looking like for 2024. And who better would it be to talk to us about that than an expert himself? In the studios today, I have Chief Economist at Bank Muamalat Malaysia, Dr. Mohd Afzanizam Abdul Rashid. Dr. Afzal, welcome back to Face to Face.
Sure.
So, Doctor, in your opinion, which direction is the global economy going right now, and how do you think Malaysia will be affected by it?
All right. Based on the IMF projections, they are looking at the global GDP to grow at a rate of 2.9% next in 2024,
Okay.
from an estimated of 3% this year.
Okay.
In 2022, it was 3.5%. So if you look at the trajectory, it's likely to be slower and moderate. And like I said, this is very much a function of the global monetary tightening, which means it's all about the interest rates being too high. And at the same time, the ongoing geopolitical concern between the major superpowers. So those are the main criteria why they see the global economy is likely to be slower in 2024. So us, Malaysia, I think being open economy, definitely that will have some impact to our export performance. But having said that, that's the more reason why the domestic demand has to play its role.
Okay.
And in this regards, you can see that the government has announced their budget for next year, which still an expansionary mode. You can see that the allocation still, I would say, quite high, 393 billion.
Okay.
That works out about fiscal deficits of 4.3% of GDP. So it tells you that the stance of the fiscal policy is still expansionary. It means they want to support the economy.
Right.
So
okay.
the more reason that the domestic demand has to play their role to offset the possible moderations in global demand.
Okay. And how did this external demand affect Malaysia's growth for 2023?
As I said, in 2023, we were badly impacted by the weakening in global demand, and it's been reflected by the negative prints in our exports.
Okay.
But next year, most of the forecast is that they are looking at positive growth for export and imports. And more importantly, our main driver for our exports is the semiconductor or the electrical and electronic sector. And based on the forecast made by the World Semiconductor Trade Statistic, WSTS, they are looking at 13% growth for global semiconductor sales in 2024.
Wow.
that should translate into better growth in our exports of semiconductor-related products. So on that score, I think there is hope that our external front or external demand would do better. So that could actually propel our GDP growth for 2024. And that could be the reason why the government is looking at a high trajectory in terms of growth numbers for 2024. They are looking at 4% to 5% GDP in next year.
Does the country have the capacity to cope up with the projections that the government has in terms of labor, workforce, and things like that?
Yeah, I think, essentially when you have that situation whereby the cost of living is still high, interest rates are still high, naturally the sentiments are very cautious now. And this is being reflected by the Malaysia's Purchasing Managers Index, PMI. It's a measures for business sentiment, which continues to hover below 50 points. So whenever it is 50 points, it means that a lot of businesses are very pessimistic now.
Right.
So this is the role, again, by the government to showcase their commitment to promote growth in the economy. So I think that could actually help to boost up the confidence level.
I see. Yeah. Okay. And based on a country's 2023 performance, what do you think is the projected economic growth rate for Malaysia in 2024?
Right. This year, first 9 months, we're already growing at a rate of 3.9%. I think we are able to grow at 4% full year. Next year, based on the government forecast, they are looking at 4 to 5%. At Bank Muamalat, we are looking at 4.3%. So the trajectory is a little bit higher from 2023.
Okay.
So the main premise, obviously, the domestic demand. And if you look at the government's efforts to ensure that the B40 will continue to spend, they have allocated quite a sizable allocations for the Sumbangan Tunai Rahmah from 8 billion to 10 billion.
10 billion.
Yeah. So typically, the low-income group, they tend to have a high tendency to spend. And given that our consumptions accounts about more than 50% of our economy, that will be the main kicker for growth for 2024. And not to mention also, I think EPF also will soon introduce the flexible accounts withdrawal. If that happens, I think that could also help in terms of generating growth in the consumption space.
Right. Now, Doctor, I want to steer the conversation over to something that we as Malaysians often hear, which is the word debt, national debt. Now, should this be a matter of concern when we hear the amount of debt in the country on the rise, or should it be something encouraging for all of us? Give us your perspective, your opinion on that, Doctor.
Sure. I think we need to differentiate which debts, If it's government, yes, any debts we need to be mindful. Be it household debts or even corporate debts or even the government's debt. But in the case of government, they are quite special in that sense. They have that flexibility to raise debts.
Right.
In particular, if the debt is in the ringgit denominated.
Okay.
In our case, Malaysian government debts in ringgit terms account about 97%.
Okay.
I mean, almost all of it is in ringgit.
Ringgit.
So they are able to raise their debt almost seamlessly.
Okay.
And we have major institutions like EPF, Co-op, and the banking institution and insurance institution, which would love to have government debts as part of their liquidity strategy.
Right.
Because government debts is typically very liquid assets in the eyes of these institutions.
Okay.
And it also carries a low risk returns for them.
Right.
So on that note, the government has the capacity, has that flexibility. It's just that they need to be mindful where are they going to spend with all these debts.
Right. Okay. Now that's
you need to be disciplined.
Disciplined. They have to be disciplined with that debt. Okay. And what's the year-on-year growth rate of the Malaysian economy? And in your perspective, what are the factors that contribute to this?
First, I think we are looking at the domestic demand, in particular the government spending. I think the government has allocated about 90 billion worth of development expenditure. So that would have positive spillover effects to sectors like constructions, manufacturing, and also services to some degree. And also because we are expecting a stable environment in terms of labour markets, so we shall expect a steady growth in terms of the private consumptions or consumer spending. And also we shall expect some turnaround in terms of our exports for 2024. So those are the key premise for our economy to grow better next year compared to this year.
Okay. Welcome back, everybody. I'm now speaking to Dr. Mohd Afzanizam Abdul Rashid on today's edition of Face to Face. He's the Chief Economist at Bank Muamalat Malaysia, and today our topic of discussion is Malaysia's economic performance and expectations for 2024. We'll jump in for another quick break, and when we come back, the dialogue right here continues.
For your latest information, get expert opinion on an issue affecting us as Malaysians and citizens of the world when we go face-to-face with our guests on Thursdays at 11:15 a.m. Only on TRAXXfm.
Good morning, everybody, and welcome back to Face to Face here on Trax Momentum. I'm your host, Anil, on the mic, and joining me in the studios today, I'm speaking to Dr. Mohd Afzanizam Abdul Rashid. He's the Chief Economist at Bank Muamalat Malaysia Berhad. And today, Dr. Afza is speaking to us on Malaysia's economic performance and expectations for 2024. Dr. Afza, welcome back to Face to Face.
Thank you.
Now, Dr. Afza, how has the Malaysian GDP growth trended on a quarter-to-quarter basis in 2023?
Right. I think we started the year with 5.6% in the first quarter, and then we went down slowly to 2.9%, and then slightly higher, 3.3% in the third quarter. So on that note, I think it's very slow, and in fact, I think we are growing at a rate below our potential.
Okay.
Which means that if assuming that we use up our resources, we should be able to grow around 4.5 to 5%. But then we are growing at a rate of 3.9%. So it's still positive growth, but it's kind of a underperform kind of trajectory, and also is actually because of the weak sentiments among the businesses, among the consumers. So that actually explains why we are in this situation in terms of a lower trajectory in terms of economic growth. But essentially, it's a slower growth environment for 2023. Yeah.
Okay. And what are some of the measures that are in place for Malaysia to address any form of potential economic challenges for next year?
Immediately, I think the government is still looking at to maintain their subsidies for the nations, but they are likely to do some adjustments, which means that they want to make sure that whatever subsidy they give is going to be targeted. Only those who are qualified will be the recipient of that such assistance. And also there will be measures to control prices. And if you notice, I think recently the government has been able to nab this cartel with the poultry industry. I think that's a good news.
Yeah.
And I hope this will continue to happen, and we should be enjoying a better pricing power going forward. But beyond that, I think those are the very short-term measures. Okay. But for mid to long-term, that's why you've been hearing about this new energy transition roadmap.
Yes, NETR. Yeah.
Right. And then we have this new industrial master plan. So these are the measures or policies that should navigate our economy, our country towards a better level within mid to long term period, because we are looking at we are in a period of transitions. We want to, essentially we will phase out this fossil fuel based kind of energy, but going forward will be renewable based energy. So this transition needs some intervention by the government, needs to be being subsidized to some degree. So the plans are there. So I think the government is cognizant about those challenges.
Okay. Since you touched on NETR, the new energy transition roadmap, one thing that has come to the limelight right now is electric powered vehicles. Right. What do you think is Malaysia's adaptation rate when it comes to completely going electric? How far ahead are we?
Yeah, I think the trend is building up, and I like to think the possible move to reduce the fuel subsidies could also help to accelerate the transitions toward EV.
Right.
So I think it's a combination of having this tax incentive for them to own these EVs. And at the same time to make sure the right behavior among our society. So on that note, having to rationalize this fuel subsidies would actually having the right incentives, so to speak, for them to transition or to switch to EV at some point.
Right. Okay. Dr. Afza, thank you so much for setting aside your time. I know you have a very busy schedule today. You're completely on the media, in the limelight this entire day. And it was such an enlightening conversation. Any final words before we let you go?
Well, I think just stay positive. Just be honest about yourself. Then, I think you should be able to prevail.
Right. Okay. Dr. Afzal, thank you very much for joining us today in Face to Face. We wish you the best in 2024 and have a lovely rest of the day ahead.
You too.
All right, I just wrapped up a very interesting conversation on today's edition of Face to Face with our guest in the studios, Dr. Mohd Afzanizam Abdul Rashid, the Chief Economist at Bank Muamalat Malaysia Berhad. And today he shared with us some insights, his expert opinions on Malaysia's economic performance and expectations. We'll be right back after a short song break, just to break away for the news. In the meantime, you are now listening to TRAXXfm Momentum with me, your host, Anil, on the mic.
You're listening to TRAXXfm's podcast. If you've enjoyed our content, more podcasts are available on the RTM Click app and website. Let us know what you think. Please email us at traxxfm.rtm@gmail.com. Like and follow us on social media at TRAXXfm Official.